What challenges do central bankers face in monetary policy? Imagine trying to steer a ship through a stormy sea while everyone on board has different ideas about where to go. That's similar to what central bankers do when they set monetary policy. They have to make decisions that affect the entire economy, but they face many hurdles along the way. One big challenge is balancing inflation and economic growth. If they raise interest rates too much, borrowing becomes expensive, and the economy could slow down. If they lower rates too much, inflation might get out of control. Finding that sweet spot takes careful judgment. Another issue is the rise of shadow banking. These are financial activities outside traditional banks, like hedge funds and unregulated lenders. They can pose risks to financial stability. Central banks need to step in when things go wrong, but doing so might encourage risky behavior because players think they will be bailed out if trouble hits. Global economic ties also complicate things. When one country changes its interest rates, it can ripple across other economies. For example, if the United States raises interest rates, it might attract foreign investments but also cause capital to flow out of emerging markets. Central bankers must consider these international effects before making moves. Political pressure is another obstacle. Governments and voters often want quick fixes or low interest rates to boost employment. Central banks are supposed to be independent, but they still face pressure to align with political goals. This can make their decisions less effective or even biased. Since the financial crisis of 2008, central banks have used unconventional tools like quantitative easing. This involves buying large amounts of government bonds to inject money into the economy. While it can help stabilize markets, it also risks creating asset bubbles or widening inequality. Regulatory challenges also exist. Financial systems today are complex and sometimes outpace existing rules. Central banks must innovate and adapt policies without overstepping their authority. They need to strike a balance between regulation and market freedom. Finally, economic uncertainty makes their job even harder. Predicting how markets and economies will react to policy changes is tricky. Hesitation or overreaction can both lead to problems, like inflation spiraling or growth stalling. All these challenges highlight the tricky dance central bankers perform. They must manage market forces and government intervention carefully to keep the economy stable and growing. It's a balancing act that requires skill, patience, and constant adjustment.